Yo, what's good YouTube? Deeps Effect here again, and I'll be your instructor for this full beginners course. So if you're new into the forex market, or you just want to like start the forex, and you feel like you need to know everything, like you need to know everything about the forex market before investing your money into it. So this is probably the best video you will get out here, because this video has been fully packed with like everything you need to know about the forex market if you're just starting. So I won't talk much. I will just let you guys to judge. I mean, after watching the full course, I'm sure you guys will have gained a lot of knowledge for free. I mean, this is like coming for free. So I've put together, videos from my mentorship, and some free beginners videos that I've put together in general to actually drop on YouTube. So one major advice I would give is for you not to skip the process. So make sure you pass through the process. I mean, skipping the process in the sense that you want to jump from, like probably from candlestick patterns, you want to jump into you drawing trend lines or the likes or something like that. Because many beginner traders make the same mistake. They come into the forex market and all they want to do is pick up their phone and just start making money. Whereas it's not like that. So make sure you go through the process and try as much as possible to not skip the process. So that will be everything for now. So I'll see you guys in the course.
Okay, so I'm not recording. Okay, so like I said, the forex market is made up of different arms. It's made up of the government, which is the president, which has to do with the president, governors, senators, local government chairman, like the government in general, and then the commercial banks. Commercial banks are, that the UBA, Zenith Bank, GT Bank, like all these banks that we go to open accounts for, and the Central Bank of Nigeria, of course. The central bank of any country is where the notes are produced, more like the naira note, the dollar note. So the central banks are the ones responsible for printing this money. And then the corporations, like the corporations, I will say now, are just more or less like hedge funds. I'll call them probably yeah, people like Palmpay, people like all those Palmpay, Opay, Paga, Fair Money, all these people that even lend you money, lend you guys money. If you want to borrow money, some of the people that you actually go to if you want to borrow money are called the corporations. Why the next one are the investment funds? These ones are just basically people, people that have money, rich people. So rich people that actually want to make money in the forex market, they can actually, invest in traders. People that have like, millions of dollars, they can actually give traders like, $10,000, $100,000 to help them trade with. So they give profitable traders money to help them trade with. So these are called the investment funds. These are the investments. And lastly, we the traders. So as you can see, we the traders make up like a small part of the forex market, and we are like more or less like the last chain of forex. Like when it comes to distribution of food, and I'm sure some of us must have done biology or something like that. When it comes to distribution of food, there is how they separate food and everything. Just more or less like this. So forex is more or less like that too. So the government is like the major arm of forex. Before you now come down to the commercial banks, central banks, corporations, investment funds, and the traders. So, like I previously said, forex is simply what? Foreign exchange. Please don't get confused. So, it's just as simple as that. So, for traders, as you can see here, risks taking individuals who come to the forex market to earn money fast. So, we are like the individual traders. That's why I call the traders. We just come into the forex market to just take a little bit. Like even the $10,000, the $1,000, like all the money you are making in the forex market, all these ones are tiny, tiny money compared to the huge amount banks, commercial sectors are controlling and the government is controlling. Because now, if government wants to bring out money, you earn billions of dollars, you earn trillions of dollars. So we traders are just taking small thing out of it. We are just making $1,000, $2,000, and the likes on the forex market. So it's just as simple as this. So yeah, I'll be going to the other topic now. So of course, I think, yeah, many of us must have worked into banks in Nigeria we are currently living. And I mean, some of us that are joining from other country, I'm sure you guys also have banks in your country. So most of us must have walked into banks and see a large screen like this. And I'm sure many of us will be wondering, like, what is happening in this screen? So this is where we actually come into the currencies that are traded all over the world. So forex is worldwide, it's global stuff. It's not that it's just a particular country that is trading forex. I mean, forex comprises of different countries in different locations. So that's why it's called, the forex market in general. It's not called Nigeria market. It's not called United States market. It's called foreign exchange market. So like this now, I'll be going straight into, I'll be going straight into, the signs that are used for particular currencies in a country, and why these plus signs and these greater than stuff are actually in the forex market. So we almost have heard of USD in the forex market. So USD is denoted as the United States dollar. I think that is very clear. U stands for United, and the S stands for state, while the D stands for dollar. Don't worry, guys. I will give, if you have any question, I will be giving room for question after the class. So just let's just concentrate and hear what I have to say now. So the second one I'll be talking about is euro. Of course, is the European. It's more or less like the European currency. So the euro has to do with euro when I think the country that actually trade euro. I think Great Britain, I think London actually trade euro. They trade euro and both pounds, but mostly euro was invented to more like to be an European Union currency or something like that. That's why you see many countries actually trade euro. Why the Great Britain pounds, the GBP, is denoted by GBP. That is this thing, Great Britain pounds. So it's just as simple as that. Like this now, I'm just naming the symbols. So when you guys actually see it out there, you actually know the names of these symbols. These are more or less like the popular symbols that when you go to banks, you see them on the board. You see USD, you see euro, you see Great Britain pounds. I'm sure you guys must have come across this stuff. So the next one is GPY. I say GPY, JPY. JPY is denoted by this thing, Japanese yen. The JP is Japanese, while the Y is yen. And the next one is AUD, Australian dollar, of course. The A is denoted by Australian. Why the U? The AU is denoted by Australian. Why the D is for dollar? CAD is simply Canadian dollar. The CA is for Canada. Why the D is for Canadian dollar? And then this one too, SEK. I think this one is more or less like Sweden Korean. Sweden Korean. Sorry, why the CHF, CHF is known as the Swiss francs. This one is more or less like a name they use for their country. So the Swiss francs. I'm sure if you guys just kind of like study this, you most likely come across them in the forex market. So when next you guys actually see this these short forms of currencies, this short form of currency here, you actually know that it's this particular country that trades it. And when next you guys see a news that has to do with this short form of currency, you know that is this particular pair that's going to be affected in the news. So that's why I'm most likely pointing out these short forms of currency pairs. So yeah, I think that's just basically it about currency pairs and what they are denoted with. So should I go? Let me skip these numbers for now, because firstly you have to understand foreign exchange first. So going deeply into foreign exchange now. I think you must have learned what is forex now, and we must have known this thing, the short forms and what currency pair stands for. So now going into foreign exchange, like why is forex carried out in the market, and why do drops and price will just drop and we just go up anytime it likes in the forex market? So I'll be explaining that now. So basically, I think all of us must have traded forex in the physical world. Is somebody talking?
No.
Okay. So basically, I think all of us must have traded forex in the physical world, whether we like it or not, because most people actually think forex is just using our phone. No, forex is our day-to-day activities. I mean, for most of us that go to abokis to actually exchange money, you carry our dollar. Most of us that have gotten dollar, or even Ghana cedis, or let's say Togo, or any country around us. So most of us must have getting a particular currency that we want to change. And if you have not done that, I'm sure you must have heard of people that are changing currency with aboki. I think they call them borrow the change or something like that. So so you carry your dollar to aboki, to change the currency for you. So that is just basically forex. You taking a particular currency that is not of your country's, that is not of your country's currency, exchanging it for another. Like, like it's not that you are changing, you are changing kobo. If that kobo was still in existence now in Nigeria, it's not that you are changing kobo to naira. If you are changing kobo to naira, it will be called this thing local exchange, not foreign exchange. But it has to be another country's currency for it to be called foreign exchange. Even though it's Ghana that is just near us here, it's still foreign exchange because Ghana is another country. So that's why it's called basic foreign exchange. So it's just as if you are trading, our dollar to naira with the aboki. So they give us a particular rate that the currency is at. They give us a particular, sometimes you go to the aboki, they say today is 740. Tomorrow they say it's 720, that dollar has gone down. Why another day they might say it's 780, dollar has gone up. So it's just basically like that. So this change of rate that we see, that we used to hear of, like that dollar has gone up, dollar has gone down, is what we are actually trading in the forex market. So I'll be going deep into that are many reasons why drops and increase like this happen in the forex market. Why? You just hear one day dollar has gone up, and you hear another day naira has gone, dollar has gone down. So you just as the same thing as comparing this thing. So this chain of forex that earlier I explained are more or less what affects the drop and the increase of price in the forex market. And the first one is the government. The government has the highest manipulation. Like, they are the ones. The government are basically what rules us in this world. Like, right from from the president, which is like the number one citizen of the country. So they have major impact in the country. That's why you see that most times when you enter forex factory, I don't know, some of us that actually check news or something like that. If you enter forex factory, you see that sometimes they'll put Governor Biden or Governor something shall want to speak, and they'll say it's an high impact news. So that is to tell you that if government alone is even in a press conference, or they want to make any announcements, they can highly manipulate the markets, and the market can move fast and drop fast. So as you can see, market movers that set economic goals and stake the market with political decisions. So of course, the government has to deal with politics. So they are like the highest arm of manipulation when it comes to forex in the market. So I'll also be going deep into that, why this government has an increase, like have the greatest increase in the forex market. I don't even need to go into that. Just basically that they are the biggest. Once it comes to government, they say that this thing, a citizen himself cannot be above the law, and who makes the law is more or less like the government that makes the law. So as you can see, so for us, that to show that traders is not above the government, that we are very little to say when it comes to the government, because there are still commercial banks here, and commercial banks that are not private credit organizations that do most of the global currency trading through economic network. This one is just basically as GT Bank, like I told you, GT Bank, Zenith Bank, and all those ones. So they have little. It's not that they don't have impact in forex, but they have little impact when compared to government, because government has a stronger arm when it comes to forex, but the commercial banks just have little impact to government, because governments are more or less like the ones that actually command the banks. If government do not approve a bank can never be open in their specific country. So the government is more or less like the organ of all of them. Before we now talk of central bank, so central bank, forex, trend setters that controls the money supply in a given country. So I already told you guys, central bank, of course, their job print money and they supply money. They supply money to commercial banks. They supply money to everybody. Like, before money even gets to the ATM machine, it has to come from central banks. So then, the reason why the central bank is actually lower than the commercial banks is that their own job is basically to print money. They are not in control of most of the credits and the exchange of the market. Theirs is just to print money and send money, distribute money within the country. That's why you see that commercial banks are actually greater than central banks when it comes to forex. Before we now talk of the corporations, I already told you guys corporations before: PANPay, OPay, all this work, all this also they are active edge seeking to protect their profits through buying and selling of currency. Most of them are just OPay, Paga, all those stuff. They are more or less like the corporations. Why the investors, like I told you guys, at the hedge funds, I don't even need to go into that. So more like I want to discuss what the drop of this thing of the forex market actually means. So let me just quickly go to my chart. I'm sure you guys are seeing this, right? Yeah. Hello. Can you guys hear me? I'm sure you guys are seeing my screen, right?
I want to ask a question.
Okay, but I said at the end of the class, but you just go on. Let me hear your question.
Okay, why is it that it's very few currency you can trade in the forex market? I mean, if it's foreign exchange, you are supposed to be able to trade other country currency now. Like, for example, Nigeria have naira. Why is it that some all these lower country like Nigeria, Ghana, some other countries, even in Europe, you can't trade with their own personal currency apart from the ones listed there, that USD,
Okay, yeah,
Great
yeah.
British
Actually,
pounds.
I actually understand your question, and I was planning on going to that, yeah, but very quickly, since you brought up the question, so major reason why we have Naira, Ghana cedis, all these ones are not actually mentioned in our Meta. You see that you enter MetaTrader, we are not seeing Nigeria currency there. It's just because the ones that are mentioned in our MetaTrader app are the highly traded currencies all over the world. So the USD is like one of the most traded currency in the whole world because many countries deal with the USD, the United States dollars. That's why you see that most times when you enter the MetaTrader app, the affiliated currencies listed on the MetaTrader app actually deals with USD. It's just because Nigeria, many countries don't actually trade Naira. I mean, apart from the value that Naira gives itself, it's not only traded by many countries in the world. But USD, I mean, even in Nigeria itself, you see traders carrying US dollar. So you see traders carrying dollar and the spraying dollar in clubs and everywhere. So that's to even tell you that the United States dollar is, has an high impact. Even the same thing as Great Britain pounds, the GBP, the GBP. Pounds too also has plenty high impact in the first one because you'll be getting pounds every day. Some people will say, I want to make money in pounds and everything. Just as the same thing as the euro and the Australian dollar. So why the Naira is not actually listed in the MetaTrader account? It's just because many countries don't trade this. It's more or less like an upcoming currency because those United States dollar, Japanese yen, all this one has been there since they've gained ground. If you go to this in Asia now, you find out that the Japanese yen is traded by most Asians. So it all comes to how a particular currency is traded and the popularity of that currency. That's when it's going to be listed in probably the MetaTrader, or it's going to be listed in trading platforms. That's why most times if you go to banks, it's just because we are in Nigeria. That's why they put Naira in the banks in Nigeria. If you go to another currency, or most currency, you will not see Naira there. You will only be seeing US dollar, you will only be seeing all those ones. Yeah. So that is just basically why Naira, Ghana cedis, all these upcoming, especially Africa, the major currency I won't say standouts in Africa is South Africa. Is it South African rand or something now? It's only South African rand that I would say standout in Africa in general. So apart from South African rand, I don't see any other currency that are really listed. But I think if you use XNES or XM, you actually see that there's Naira. If you go to I don't know one specific place, I actually saw it one time when I was trading for it, and I saw that Naira was actually in our MetaTrader, but it's not traded. It's not traded by plenty traders. The most traded currency is Euro USD. That's why I see it on top. Is the most traded currency. I mean, about 90% of traders trade Euro USD in the forex market. But like I said, I will be going into that. So what is good, guys? So now that you basically know what forex is, let's jump into the next topic, guys, which is currency pairs. So what are currency pairs? So like I think I previously laid emphasis on what currency pairs are. So currency pairs are just like currencies from different countries, just like the Euro USD, which is the euro versus the United States dollar. So major currency pairs are currency pairs that contain the US dollar. such as the Euro USD, the Euro versus the United States dollar, USD JPY, United States dollar versus the Japanese yen, GBP USD, Great Britain pound versus the US dollar, USD in CHL. I think United States dollar versus the I think what is this? I think the France or something like that. Like yeah. So USD versus the Canadian dollar, that's the CAD. Australian dollar versus USD, that's AED USD. This is New Zealand dollar versus USD. So basically, just pairs that contain USD are called major currency pairs, while pairs that do not contain USD are known as minors or cross currency pairs, such as the Euro CHF, Euro GBP, Euro CAD, Euro JPY. So pairs that do not contain the USD are called minor slash currency cross currency pairs, while pairs that contain the USD are called major pairs. So guys, to the next one, which is how to read currency pairs. So if you open the chart and see Euro USD is equals 1.05650, what it just basically means that 1 euro, that is 1 euro, is equals $1.05 of the United States dollar, just as how the GBP. So let me just put this in the simplest term. Let me see if I have a tool here. Let me just see if I have a tool here. So okay, so so let me just basically edit. Let me put on my drawing. My drawing tool. Okay, so let's say we have Naira, which is I think Naira is NGR, right? NGR USD. So let's say we have Naira and you see something like this equals 450.500. Pardon my drawing, guys. I just quickly want to explain this in the simplest term. So let me cancel this. Oh, sorry. Okay. So let's say you have something like this. Naira versus USD equals 450.500. That means 1 USD, $1 is equals 450 Naira, which is like our current exchange rate, right? It's just as the same way if you go into the MetaTrader app. Like I will definitely explain this later on in the video. The MetaTrader app, which is our trading platform. So it's just as the same thing as Euro USD is equals 1.056. So 1 euro is equals $1.05. That's just basically what this is telling us. It's as simple as that, guys. So same as the Naira USD. So $1 is equals 450 Naira. Points. I think 5. This 50 kobo. Is it 50 kobo or 5 kobo? 50 kobo. Yeah. But now we don't trade kobo in Nigeria, so definitely that's not. So that is it about this lesson, guys. Let's go into the next one. So the next lesson, guys, is understanding Forex language. So yeah, like when you start trading, like you'll be hearing some Forex stuff, like from Forex slangs like PEEP, lot size, leverage, and margin. So basically, I'll be explaining what this stuff means in the Forex market. So PEEP percentage is like the amount of like price movement in the chart. So PEEP is identified by how price move. So let's say price move from 1.0800 to 1.0801. Price just move 1 pip. So that's it. As you can see, it's as simple as that, guys. If price move from 1.0800 to 1.0801, price move 1 pip. If it move from 1.0800 to 1.0810, price just move 10 pip. So it's just as simple as that, guys. Next one is lot size. Lot size, the number of currency units you buy or sell when you trade. You may put in 0.5 lot size or 1 standard lot size. Yeah, this 1.00 is called 1 standard lot size. So lot size is the like amount you are putting into the Forex market. So actually risk. So your lot size will determine the amount of profit you are going to gain at the end of the day. So the third one, guys, is leverage. Leverage is how you are able to trade with your money that you have. If you have a 50-to-1 leverage, you deposit $1,000 your trading account and you can trade the position worth $5,000. So if you have a 0:1 leverage, and you deposit $1,000, your $1,000 is actually $5,000 in the forex market. So like the game of leverage is actually played by the brokers. So brokers use the leverage to actually increase your account lot size, not in reality, but in the forex market. So if you have a leverage of actually 100 to ratio 1, and you deposit $1,000, your $1,000 will be like 100K, $100,000 in the market. So leverage is just as simple as that. Leverage can work for you and go against you. We talk more on leverage and margin taxes, mini costs. Like the leverage, I'll like go deeper into the leverage in my like intermediate or advanced series. But basically, this is what leverage means. So the first one, guys, is margin. Borrowing money not physically from a broker or order to trade a pair. So if you have 1,000 in your account and wanted to trade a position of 50,000, that would be 5 margin percentage. So basically, what margin just means is that the amount you are borrowing from your brokerage firm. So like let's say you have a margin of 5%. What you're actually doing is that you're borrowing about $50,000 from your broker to actually trade with a $1,000 account. So that is just basically what margin is. So margin will actually determine the amount of profit and loss you can. So margin will determine the amount of loss your account can take. So you will be something like margin call, like margin has broken the guy's account, he has blown the account. What that means is that like the broker cannot borrow you any amount again. So that means you've lost everything that the broker borrows you. That's why it's called margin call. So again, we talk about that in the taxes mini course, which is attached to the series 4. So that is my advanced series. That is when you really need to understand the in-depth of margin. So for the beginner stage now, I don't know, you don't really need margin or something like that. But basically, this is just like the basic understanding of what margin is. So other slang such as the long or short. So long and short is basically buying and selling. So either you are placing a buy or a sell trade, which is you are placing that means you are predicting that the market will either go up or down. So if someone says I'm going long on Euro USD, simply means that he's buying. While if someone says he's going short on Euro USD, simply means that he's selling. So next one, guys, is the bearish, bullish or bearish. So same as the above, you just are the same thing. So the bullish and the bearish, the bullish is long, while the bearish is short. So it's not the same thing. If someone says Euro USD is bullish right now, that means Euro USD is going up, it's rising. While if someone says Euro USD is bearish right now, that means Euro USD is dropping. So you get the illustration, guys. So all forex quotes are quoted into two prices, bid and ask. The bid is the price which the broker the bid is the price which the broker will buy the base currency in exchange for the quote currency. For example, if GBP/USD reads 1.1812/15, the bid price is 1.12. Would you sell £1 British? You would sell £1 British for 1.128. So what this is basically telling us is that the 1.128 is actually what is opening. This, just ignore this slash 115, because it's actually the leverage. That is the taxes the brokers are charging from you. So the 1.5 is actually called the taxes brokers are charging for you. Like you don't necessarily need that, but I just basically say that I should just go through it. The ask is the price at which the broker will sell the base currency in exchange for the quote. If Euro USD reads 1.012, the ask price is 0.15, which is what the broker is asking from you. You would buy €1 USD for 1.05 because what? Because the broker charge you commission for that particular stuff. So what the broker is charging you is like 3 cents. Let's take for instance the broker is charging you 3 cents, but really what you are gaining is actually 1.128. I know you might not understand this, but definitely you understand that as time goes by, guys. So bid and ask price aren't that important in knowing. You will see you see it on the MetaTrader before you click on coin. So that, like I said, it doesn't really matter, but you definitely see it along the line. Spread is what is important. Yeah. The spread is the difference between the bid and ask price. Like I previously said, the spread is important to know because it helps you understand how much you'll be down with your first trade, paying the broker commission. So I just said it before. So like I said, the bid and ask price is the commission the broker charge you with. The spread and the lot size is what you pay the broker as commission for getting you in the trade. So, like I told you, so that 3 cent, like I told you, is what the broker is actually charging you of. So it's just a commission. Example: if GBP AUD is 1.8061 slash 760, the ask is 76, while the bid is 61. That means the broker is actually charging you, like, let's say for instance 15 cents. Like, this is just an illustration, I'm not actually stating the currency. So let's take for instance broker charging you 15 cents. So the spread is 15 cents, which is your commission. Let's say you buy GA with a standard of 1 lot size times 15, that is like $15. Okay, that's the example I gave you. The minute you open the trade, you will be at minus $15. So immediately you open the trade, you'll be seeing something like minus $15, even if the market doesn't move at all. That is actually what the broker is charging you. It's not up to minus 15. This is just an example. But depending on your lot size, it can actually go down to about probably 10 cents. Like, it can actually go very down. So depending on your lot size, because like a big account for you to place a one standard lot size, you might probably have like 1 or 2 or 3K for you to place a one standard lot size. So that's basically, guys. Anything after the pure profits, if you make $900, MetaTrader will show that you make around 818. So they're minusing their spread. So like the spread is just basically what they charge you of. So most people do not have that high spread. I just use this as an example. So like I said, it's just an example, guys. It's not that high. So Forex. So Forex is the only traded in specific amount called lots. Remember, it is number of currency units you buy or sell. The standard size for a lot is 1,000 units of currencies. So basically, in the forex market, a standard lot size, like I told you, is 1.00, and it's like 100,000 units of currencies. While a mini lot size is 10,000 units of currency, which is 0.10 lot size. A micro lot size is 1,000 units of currency, which is the smallest. That's the smallest lot size. Like, as time goes by, you see this on your MetaTrader app. Don't worry, guys. 0.01 lot size is the smallest. Only reason I'm telling you the currency unit is because some brokers show the amount. That's why the broker show you the quantity of the lot size. It's just there to give you details. But on MT4, PS shows the currency unit in the lot size. It's a lot easier to understand. For example, if you use a one standard lot size, that means every price move from 1.0 from 1.1000 to 1.1001. But these numbers are just confusing. Sorry about that. Yeah. So you get $1,000. What this is basically telling us that for every one pip move, and you guys understand the pip move already. So for every one pip move, if you use a one standard loss, for every one pip move, you get $1. So if price move from 1.1000 to like 1.110, that means you get $10. So you guys get the illustration, right? That means you get $10. So if price move from 1,000 to 1.100, you get $100. So it's just as simple as, like I told you, price move fast. Don't worry, you see that. You see that price move fast when you actually get to the MT4. So if price move from 1.1000 to 1.2000, that is $2,000. Just as simple as that, guys. Yeah, so I'll see you guys in the next topic. Next topic here is types of trade analysis. So this is basically there are 3 types of analysis. So the first one, which is technical analysis. Majority of traders trade this way. This is where traders can look at history, price movement, and determine the current conditions of market. So basically, guys, the technical analysis is like what we trade. Like, that's why you see like MT4, you see charts on the screen of most traders. That is called technical analysis. They're actually looking at the charts for telling the chart, like showing what's like telling what will happen in the future. So that's just called basically technical analysis. So there are 3 major types of technical analysis, and the first one is technical analysis. Why the second one is fundamental. So the fundamental deals with news, economics, political, and policies, just basically news. Affect stocks heavily more than currencies, but it's still a major influence in in our currencies, which is in the forex market. So this analysis, they work hand in hand. If you don't know, both technical, the fundamental, and the sentiment, they will all work hand in hand, because like these are types of analysis you just as if, yeah. So a ceiling fan, exactly. A ceiling fan that has three rooms. So everything is tied together. So if they are moving, so all of them working hand in hand to actually give you air. That is just the same thing as these three types of analysis. The third one is sentiment. So sentiment analysis, each trader has their own opinion of the forex market. So this is basically where traders will give you their own opinion. Like they'll say, like, is it that the market is going bullish or bearish? Like I told you before. So they're either going long or short after they've done the technical and the fundamental analysis. So fundamental analysis deal with news, any news concerning Buhari, Obasanjo, Tinubu, and the likes. So any news concerning economics, or just like bank, GT Bank, Eco Bank, and the likes. So that's what I call fundamental analysis. The technical, like I said again, is when trader read the chart. You see them mark the chart to put like a resistance, support zone. So that is called technical analysis. To tie it all together, fundamental helps for the sentiment of traders, whereas technical help us visualize it on the chart. So like I said, technical for the charts, visualizing the charts, for telling what will happen in the charts, while fundamental helps sentimental traders, which is their opinion. So if news come outside, they'll be like, GT Bank have closed. Definitely, you know that if GT Bank closed, the stocks of GT Bank is going to drop heavily, because like they have closed now. So the stocks will definitely drop heavily. But if they are saying that GT Bank gain 1.2 billion, you don't see that market is definitely going to move up, because your GT Bank just gained an huge amount of money. So that is basically it on types of analysis, guys. I'll see you guys in the next one. So the next one, guys, is trading sessions. The forex market is open 245, which means the forex market is open 24 hours. So it's not 247, because forex is not actually open on Saturdays and Sundays. That's why it's tagged here 245. On weekends, forex don't actually open. So even though it's 24 hours, people aren't working 24 hours in their respective country. The city with the major financial hub is relevant time zone is giving the sessions during the business hours. When it's 8 to 5 p.m. in New York, it's actually 8 to 5 p.m. in London and Tokyo. It's not 8 to 5 p.m. in London and Tokyo. So wherever normal business hours ensure that the actual currencies, the seasons is held active. So what this is just all this story, all this drama, what it's just telling us is that the 8 o'clock in Nigeria is not the same thing as the 8 o'clock in the US. And their business hours in every and each countries. So in London, you might just have people work from, let's say, probably 9 to 5 or 8 to 5. So, and the 8 to 5 in London there is not the same thing as the 8 to 5 in Nigeria. So there will be like different time zones. So that is what currency sessions, that's what trading sessions is just telling us all about. So major trading sessions are the New York session, London, and Asian session. So the Sydney session is not most of the major sessions, but the Sydney session start around 5 p.m. Eastern time, but it is not fully considered as volatile as all the other three sessions, which is the New York, London, and Asia session. It's not volatile as that. So we'll be only focusing on the New York, London, and the Asian session for now. So this is basically what you need as a beginner. So let me go to the London, New York. Okay, the Asian session. Asian session begin a few hours after the market resets, between 7 to 8 p.m. Eastern time. At the end of this lesson, I think I'll show you guys Nigeria times of all this stuff. So no need to worry yourself. Just relax and pay much attention. So Tokyo is the major financial market of Asia. About 21% of the FX transactions are done here. It's not just Tokyo, as Hong Kong, Sydney, and Singapore are also active as well. So Japan is the world third largest forex trading center as well. Yen is the third most traded currency as well. So during the Asian session starts between 7 to 8 p.m. like I told you guys. So then I think the 7 to 8 p.m. in the Asian session right here is I think around 5 p.m. Is it 5 p.m.? I think in the evening time. That's the evening time in Nigeria. That's when Asian session starts. Liquidity may be thin. Most activity occurs in the beginning of the session when economic news is released. A lot of news from Australia, New Zealand, Japan, and other are announced during the Asian session. So basically, you don't need to know much about this session, but I'll definitely show you the illustrations of the time zones of each specific session. So the first one is the Asian session, guys. Right after the Asian session is the New York session, starting around 2 a.m. Sorry, guys. So starting around 2 a.m. Eastern time and lasting until noon. I think I'm very familiar with the London session. Like London session is my thing. So the London session is from 9 a.m. in Nigeria to 5 p.m. That is London session time. London, London is looked as the capital of forex. Over 32% of all forex transactions are carried out here. Very, very volatile. So the London session is very, very high. It has very high liquidity. That means price moves a lot during the London session. That's what is my favorable time. So I trade from 9 a.m. in the morning to 5 p.m. That's why I trade basic London session. I don't worry about any other session because that's like my best session. That's where I make my money off. And that's like perfect for me. Trends may reverse towards the end of the session as traders are looking to lock in their profits. Towards the second half of the London session, the New York session starts, which is the third major trading session. So, sorry, this is a mistake. This is supposed to the New York session starts around 8 a.m. Eastern time, and the market is set around 5 p.m. a new day. 85% of trades involve the US dollar. Very high liquidity during the overlapping period of the London session. So, I think I also have an idea of when the New York session. The New York session starts around I think 12 p.m. in the afternoon in Nigeria also. But let's see. I think I drew a chart at the end. Most times, economic news involving the US dollar are reported in the morning. Yeah. There are a few times where the news can be reported later in the day, such as the FOMC news. I think this news is very, very, very popular. The FOMC news. It comes around the evening time, evening/night time. So that is the second most volatile. So right after the London session is the New York session in terms of volatility. Okay, so this is it, guys. This is the table. You can just basically screenshot this and keep it on your phone. You can put it in your calendar or anything. So, like I said, Sydney session, which is the first one we talked about, it opens in Nigeria time 10 p.m. That is 10 p.m. in the midnight. Why it closed 7 a.m. 7 a.m. in the morning. So this one might be very favorable to those that like go to work. You know, that those that go to work do 9 to 5 or 8 to 8. So if they come back, they can actually trade. They actually pull up their laptop or PC or phone to trade 10 p.m. in the night and to like 7 a.m. Why the next one is the Tokyo session, which is the Asian session. So Tokyo and Asian session kind of like the same session. So it opens 12 a.m. in the morning. That is like in the midnight too, and closes 9 a.m. That is 9 a.m. in the morning. This one is very favorable to those that are working too. The London session there, like I said, 9 to 6. Oh, it's 9 to 6. So the London session is 9 to 6. I thought it was 9 to 5. But the London session opens 9 a.m. and closes 6 p.m. in the afternoon. This one might not be very favorable to those that go to work, but this is the session that I actually trade. You know, I don't work. Like Forex is my work. So this is the major session I trade. Then the New York, right? The last one is the New York session. Opens 2 p.m. In the afternoon and closes 11 p.m. So working class can actually catch some of the New York session since it closes 11 p.m. I mean, you don't work till 11 p.m. So you can actually catch most of this. So this is basically what I have been explaining, all the blah blah stuff I've been saying. This is basically everything. Trading session. You have the Sydney, Tokyo, London, and the New York session. So this is just what you need to know about trading session. So let's go to the next one, guys. So market opened and the market reset. Yeah. So you need to know that the market opened on Sunday at 5 p.m. That is Sunday in the evening on Sundays. and closes on Fridays at 5 p.m. So closes in the evening. So this evening, this 5 p.m. is actually Eastern time. So the Eastern, I think Eastern time around Nigeria time, the Friday will be around probably 10 o'clock. Yeah, I think 10 o'clock. Opens on Sunday around 10 o'clock. Yeah, then closes on Friday around 10 o'clock. So just do the correction. But though it's not just necessary. I just feel I should dive deep into the market and opening reset. So every day at around 5 p.m., let's say 10 p.m., the market resets. If you hold the trade overnight past 5 p.m., 10 p.m. Nigeria time, remember guys, you will either be charged or credited a rollover fee by a broker. So broker actually charge the rollover fee. Not to worry about that. The rollover fee is very tiny. It's as low as 1 cent. That's like 30 naira. So not to worry about that. When you're actually making money on the forex market, you won't even notice this. The fee is calculated by the interest rate differential between two currencies of pairs while you are trading. It also depends on whether you're buying or selling. Example, if the European Central Bank has an interest of 3% and the Federal Reserve has an interest of 2%, 2.25%, and sells Euro USD, you're technically buying US dollar. That means you're buying US dollar and selling Euro USD. So I don't know if you guys get this illustration, but what you're actually buying is 3%. It's as simple as that, which has an interest rate of 2.25%. So you're buying 3% to get an interest rate of 2.25%. That's just basically what this is saying. When the interest rate of the country you're buying is more than when the interest rate of the country you're buying is more than the interest rate whose currencies you are selling, your trading account will be credited. If the opposite happens, your trading account will be debited. So basically, you buy 3%, while the interest rate is 2.5. So that means your 3% is actually greater than 2.25%. That means when you wake up in the next morning, you've actually gained about 1%. That is what basically this is what basically. So not to worry, it can be as small as 50 cents. So like I said, it can be very, 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 very small. And even as high as $30. So $30, that is if you have like probably $18,000 account. So that means like you can actually be charged that, and that even depends on the lot size you trade. So I think the highest I've ever gotten is $2 charge of this market opening. So you will see that when you get to the MetaTrader, don't not to worry, guys. So depending on what pair you are trading and what lot size you are using, a similar situation can happen by holding your trades over the weekend, but it also have a bigger consequences. The thing is that you shouldn't even hold your trade like over the weekend if you are not a swing trader. And we'll be diving deep into the types of traders too. So basically, let me just explain this. The world doesn't stop over the weekend. The market does not. So the world doesn't stop over the weekend, but the market does. So when the market opens on Sunday, it has to account for what happened over the weekend when the market was closed. So if you're holding a long trade, such as DBP USD over the weekend, and on Saturday, something major happened with Brexit. So Brexit is like a big it's like a big country in the US. So Brexit is like a major country in the US, and that will like significantly impact the forex market. So on Sunday, once the market opens, GBP USD has tanked, and your account will see ramifications on holding your trade over the weekend. Only swing traders should even think about holding that trade over the weekend. So, like I said, swing traders are the ones that just hold that trade. So, swing traders are those that trade for days, weeks, or even months. That's just basically what this is talking about. Yeah, so this is basically everything you need to know, guys, on trading sessions, market opening and reset. So if you need to know more, I think I'll be diving deep into all these in the intermediate and advanced series. So this is just basically all you need to know as a beginner. So I think the next one will be the swing trader, intraday trading, and scalping. So off to the next one, guys. So the next one, guys, is currency pairs for beginners. So basically these currency pairs, like I've just come together and picked the type of currency pair that I feel will be best for someone that is just coming into the forex market. And this type of currency pairs are actually medium. I'll just put it as like medium volatile slash not volatile, like not very volatile. Why I actually picked less volatile pairs is because like you guys are beginner traders, and I don't want you guys to actually come into the forex market and either lose big. Yeah, either lose big, because volatile pairs comes with a lot of risks, and you guys are beginner traders and you might not be able to handle it. That's why I actually pick medium volatile or not volatile, not very volatile pair. So these beginner pairs are Euro USD, GBP USD, USD CAD, and odd USD. So these pairs are not, it's not that these pairs are not very volatile, they're actually volatile, but why I actually picked it is because you guys can easily do your technical analysis on these pairs. So I explained what technical analysis was before. So you guys can actually do your technical, and it's very easy to understand. So with you can understand Euro USD very, very well, because it's actually traded by a lot of traders. About 90% of traders in the forex market trade Euro USD and GBP USD. So out of these 4 pairs, the one I actually trade the most, I'm going to say this to you guys, is GBP USD. Like, it's one of my best pairs. But the new one now that I actually trade the most is actually GBP JPY. I actually understand that, and it has been working. Like, it gives me a lot of profits very well. GBP USD is one of the major pairs in the first month. I actually started with GBP USD and USD CAD. They're actually very, very good. So basically, these are the currency pairs I feel I should like introduce to you guys as a beginner trader. So when you're coming to the forex market, make sure you keep these 4 pairs in your mind. But when you open your trading app, you can add them to your tab and start trading with them. So without further ado, let's get to the next session. Okay, so this is the class 4, day 4 of the 10 days mentorship, and this is basically for beginners class. So in today's topic, I think our previous what we treated previously was what we treated previously was I think markets open and reset, and we also talked about trading sessions in the forex market. So today we'll be looking at scalping, intraday trading, and swing trading, and as well as candlestick patterns. So I've kind of like joined both topics together, since I think we have enough time to actually catch some of these topics in the forex market. So the first one will be scalpers. So scalpers are basically traders looking to get in and out of the market very fast. So they have a very high lot size with high leverage, and they are looking to gain 10 to 30 pips over and over again. They usually stick to volatile pairs and glue to their screen, not using a stop loss. It seems that most times scalpers don't actually use stop loss, but for me, I actually use stop loss in the forex market. And also, this is basically an explanation of what I do in the forex market. So basically, my goal is to gain at least 20 to 30 pips. Sometimes I go as high as 40 to 50 pips in the forex market. So basically, I'm a scalper, but I use stop loss. So this this is not all the time that you like. It's not advisable for you to always use stop loss in the forex market. So that's good. So basically, the first one is scalping, right? So let's talk deeply about scalping. So the type of currency pair you actually choose will determine if you are either the type of currency pair you choose will determine if you are either a scalper, intraday trader, or a swing trader. So like I previously said, this is the topic: scalping, intraday trading, and swing trading. So the type of currency you choose will determine if you're a scalper, a swing trader, or an intraday trader. So as you can see right here, scalpers are most likely stick with volatile pairs. Volatile pairs in the sense that they want to get in and out of the market very fast. So they are not looking to stick with pairs that don't move very fast. I mean, if they are sticking with pairs that don't move very fast, you might stay in the chart for like 2 or 3 hours, which is kind of like an intraday trader stuff. But scalpers looking to get in, 10 to 30 minutes, they've gotten that 10 to 30 pips in the market, which I usually do. So the kind of trader I am personally is a scalper slash intraday trader. But I'm basically, I'm mainly a scalper though. But I can also hold trade for 5-8 hours sometimes in the forex market. But basically, I'm a scalper in the forex market. So as you can see right here, they look to get 10 to 30 pips all over and over again. So a scalper can take 2, 3, 4, 5 trades in day. Because what they're initially getting 20, 30, 40 pips in a day. So they can take 2, 3, 4, 5 trades in a day. So I think that is it about scalping. Because so that's just the basic tips about scalping. They tend to gain 10 to 30 pips, and they can trade over and over again, and they stick to what currencies that are very volatile. I think examples of volatile currency would be GBP, JPY, GBP USD, gold, US 30, Nasdaq, and the like. So those are the kind of like volatile pairs in the forex market. So the next one, which is intraday trading. Intraday traders are traders who are looking to trade daily. They get in at 8 p.m. and get out at 8 a.m. So they can all trade for like the whole day. Intraday traders, but they don't swing. They don't swing in the sense that they don't cross to the next day. They only hold trade for a particular day. They only trade hold trade for a particular day. So get in at 8 a.m. and get out at noon. Intraday traders are looking to get 40 to 80 pips. Majority of traders in the world are intraday traders. So that was why I was giving the instance that I'm kind of like in between. I'm kind of like a scalper slash intraday trader, because sometimes I usually look forward to getting 40 to 80 pips sometimes in the forex market. So that's why I told you guys that I'm kind of like in. So sometimes I can hold my trade for 4, 5, 6 hours or 8 hours sometimes in the market. Just looking at how if I feel that it's a good trade, and I just want to hold. But most times I'm actually scalping in the forex market. So this is a typical example of intraday traders. They hold that trade from 8 p.m. in the night to around 8 a.m. in the morning. They only trade for a day, or 3 a.m. in the morning, and hold till noon. See, that is probably in the night, and get out of the trade. So majority of traders in the world are actually intraday traders. So about I think 80 or 70% of traders in the world are actually intraday traders or slash scalpers. So next one is swing traders. Swing traders, example of currency pairs that intraday traders trade. They'll most likely stick to volatile currencies too. Even though they trade normal currencies too, they trade currencies with AUD, USD. Sorry, they trade currencies with USD. So trade currencies with USD in the sense that let me add. So most currencies that are with USD are most likely what intraday trader trade. Whether GBP USD, USD JPY, USD CAD are most likely favorable with intraday traders. So they don't trade currencies that are not volatile too, and they don't trade currencies that are too volatile. So they're kind of like in the middle. Even though they can trade US 32 gold and the likes, but they're kind of like in the middle of scalping and swing trading. So let's go to the third one, which is swing traders. Swing traders are looking to hold their trade for a long-term gain. They look forward for a long-term gain in the forex market. So a swing trader can get in on Monday and get out on Friday. So they can hold that trade for like 5 days or even weeks. They can hold that trade for weeks, days in the forex market. As you can see, getting on the first, get out on the 14th. Swing traders typically hold that trade between a few days to a few weeks. They are looking for massive gains such as 250 plus pips. They usually have larger account size. Which trading style looks the most convenient for you? So at the end of this class, of course, you come like you will now go you're the one that is actually going to choose if you're compatible with scalping, or you're compatible with them intraday trading or swing trading. Because some people actually have businesses. Some people work during the day, so they will never have time to like analyze the chart and be staring at the chart like scalpers. So they may actually want to become swing traders in the forex market. But let's quickly talk more swing traders. So like you see here, they can hold their trade and look forward to get to 250 plus pips. So swing traders can hold their trade for days. They can get in on Monday and get out on Friday. They're looking forward to catch massive moves. So as you can see, if you go to the daily, this is where most swing traders are actually prioritize their moves in the market. So a swing trader can actually get here. This is the daily, right? Each candle signifies one day. So a swing trader can actually get in here and what get out here in the forex market. So a swing trader can hold this trade for 1, 2, 3, 4 days, or 4 days before he initially would get out, or 3 days before he initially get out here, taking TP at this point. So that is a basic example of a swing trader. So yeah, they usually have a larger account size. So of course now, if you're holding trade for that long, you don't want to be holding, you don't want to have a $50 account or $100 account, because you want to gain a massive move. So you want to have a larger account size. A larger account size starts from $1,000 upward. So you want to have at least $1,000 in your account if I will even recommend it to become a swing trader. So you are the one that is actually going to pick a style that is convenient for you. If you choose to become a scalper, getting in and out of the forex market just to gain 20, 30, 40 pips in the market, or you want to become an intraday trader, trading for the whole day, looking forward to get 40 to 80 pips. If that is convenient for you, you can actually choose that. Or you want to become a swing trader, you don't want to be always you don't want to be staring at your chart always. You want to get in and out of the market very quickly and hold your trades for days. Just forget that you won't place trade and come back to check it probably after 3-4 days, or you're going to be checking it probably in the end of the day. Like, if once you come back from your work or something like that, probably in the night, you check how your trade is going. The next day in the night, you check how your trade is going. Next day in the night, you check how your trade is going. So that's basically how swing trader operates in the forex market. So yeah, the one that is going to choose which style is the most convenient for you. So I think that's it about scalping, intraday trading, and swing trader. So those are the 3 types of traders we have in the forex market. So the next one is quickly candlestick patterns. I just feel that let me cover candlestick patterns today. Yeah. So of course, we are new to the forex market, and basically every candlestick actually signifies something in the forex market, even though many people actually pay attention to that, but every candlestick actually signifies something. So first, we'll be talking about the long green candlesticks and the long red candlesticks. So basically, this is just a basic candlestick in the forex market. The long bullish one, which signifies the green candlestick, while the long bearish one, which signifies the red candlestick. Well, so what this is basically telling us is that once you see a long green candlestick in the forex market, it signifies that there's a lot of buying power. So there's a lot of buying momentum. A lot of buyers are getting into the forex market. Just as in the same way we have the long red candlesticks, also signifies that a lot of sellers are getting into the market, and they are pushing the momentum of the market. So example is what you have here. As you can see here, a typical example is what you have here. So this is what you call the long red candlestick. So anytime you see long red candlestick, it means what a lot of selling pressure is coming. So they want to put the market down. And once you start seeing, I'll go into this one too. So, but let's talk about the long red candlestick. Red candlestick means what? A lot of buying power, a lot of selling power. If it's bearish, why? If it's bullish, a lot of buying power. Something like this. Yeah, exactly. So if you see a long bullish candlestick, it shows that a lot of buying momentum, a lot of buyers are getting into the market. So I think that's it about. So the short green candlestick actually tells us that the buying momentum is actually losing. So a lot of buyers are not actually are kind of like getting out of the market, so they're not buying again. So that's why it's forming short green candlesticks now. So this is kind of like undecisive or something like that. But so this is actually telling us that probably market is losing momentum or something like that. Just as the same way as the short red candlestick, probably market, a lot of sellers are getting out of the market. So this is basically what it's telling us. So example of that will be something like this. Something like this, candlesticks like this shows us that the sellers are starting to lose momentum. So as you can see, after this basically for me, after all this one basically for me, you can see that price actually reversed, and price started kind of like wanted to start to going up, started going up after this candlestick actually formed. So this is the symbol for long for short candlesticks, just like the same way as this right here. As you can see, after the short candlestick form, a reversal, you see that price literally changed. And the example of the bullish one something like this too. So as you can see, after this short bullish candlestick form, shows that price. We look at a lot of buyers are already getting out of the market, so it's probably time for you to exit the trade. So after this short bullish candlestick form, the price actually changed direction and started was heading down. So the third one will be Maribozu. We cannot actually touch all these candlestick patterns, but I'll be touching the basic ones and the one I actually identify in the market. So the third one is Maribozu. Maribozu are actually full candlesticks without wicks. So as you can see, wicks in the sense that there's not this line, all this line at the top is not actually in Maribozus. So Maribozus are full body candlesticks. They open and close fully. So it shows us that there's a very, very, very strong buying pressure in the market. Once you see Maribozus like this, if you see a green Maribozu, it shows that a lot of buyers are getting in the market, and this market is likely going to head up very aggressively. Just as the same way as if you see a red Maribozu. A red Maribozu also signifies that there's a lot of sellers getting into the market. And the market would most likely go down very aggressively. I think I actually saw a lot of that on GG or something like that. Was it on GG or GU? Yeah, I think it was on G. I think it was on GG or G. Then put G. See, G is actually free now. So full body candlestick we're actually watching out for now. So I'm looking for a basic example of the full body candlestick. Okay. If you look closely here, this is kind of like a Maribozu, but they see a tiny wick right here. I'm looking for the one that will show no wick at all. So this is an example of Maribozus in the market, something like this, but without wicks. Like they are just very very full body candlesticks that will just come out in the market. This shows you that there's a lot of strong buying pressure. I actually use one of these to actually catch a trade in the market. Yeah, exactly. I've seen one, a perfect one. So this is an example of the Maribozu. As you can see right here, guys. This right here, this candlestick right here. As you can see, no wicks at all. And it shows you that after the Maribozu initially formed, even though price came here, this is on the 30 minutes. After the Maribozu form, see price drop. Initially came here and dropped aggressively. So this shows us that a lot of selling pressure actually happened right here. And market drop aggressively. See, no wicks at all. There's no wicks. And so this is a full body Maribozu. So the third one, so another one I will show you is the bullish crossing Maribozu. Yeah. So those I'll show you that one too. So this one has little wicks at the bottom or at the top if the market is bearish. Let me show you guys a basic example, because I saw those ones here. So those ones are the ones that actually form very well in the market. So this is an example of that one, of the bullish the bullish crossing Maribozu. So these ones actually happen a lot. So you see a tiny wick. If the market is bullish, you see a tiny wick below, and then a full body close. So it's a closing Maribozu, a full body close up. You don't see any wick up, but you see a tiny wick below. So that actually shows you see the same thing. Shows you a lot of buying pressures actually happening in the forex market. Just as the same way, if you see a bearish one too. Yeah, if you see a bearish one, so just as the same way, a lot of selling pressure is actually happening in the market. I think an example is we have a clean example right here. I'm sorry. Okay, so you have a clean example right here. As you can see right here, see short wick, a short wick, and got a clean bearish Maribozu. Even though this week is supposed to be on top, but I didn't say any example. But you can actually use this as a Maribozu too, because that's a full body closing candlestick. But the wick is supposed to be on top. So I'm looking for a clean example. I'm not seeing a clean example at all, but this is how the wick is supposed to look like. It's supposed to be on top, exactly. So because the market is selling towards the downside, so the wick will be on top and then a full body close. I think I actually got one of that, but market is turning towards the upside. That's why I'm not seeing this bearish, plenty of this bearish Maribozu. But let's see if I'm going to get them. Okay. Okay, yeah, perfect. As you can see, a clean bearish Maribozu. As you can see here, the wick on top, and then a full body close right here. This is This is the example I'm giving. So this is a clean closing bearish Marigold zone. You can see bearish closing Marigold zone. A week will happen, and then what? A full body close actually shows a lot of selling pressure. So after this Marigold form initially, you see that price literally dropped and came here, dropped heavily. So it shows you there is a lot of selling power in the market. So before I continue, I would like to also clarify this, that you don't want to be using candlesticks confirmation only to get into the forex market, because you see a red or green Maribosu, you just feel that market is going to sell. No, you don't want to do that. You just enter for a sell after seeing this market. No, I actually tell most of my students when they're getting into the forex market, look for at least 2 or more confirmations before entering any trade. So if you're in the market, you see a Maribosu, wait for another confirmation. The second confirmation could be that price got to a key level, or there's a moving average crossover, or price is in a Fibonacci level. Make sure you look for another confirmation to join your trade. So you will have a stronger bias that price is going to head down no matter what happens. So look for other confirmations, not that you only be going with candlestick pattern because you saw a red Maribosu, you feel that market is going to sell, or you saw a green Maribosu, you feel that market is going to buy. No, don't do that. Wait for other confirmation. As you can see it right here, this is another bullish Maribosu right here. Yeah, that has cleared, but that was an example of another bullish Maribosu right here. So let's move forward to other candlestick pattern. Okay, yeah, so this is the opening Maribosu. Yeah, this is the opening, just as the opposite. It's just the opposite of what this one that actually form. So any candlesticks that actually have closing body sticks, like full body closing candlesticks, are actually called Maribosus in general. So the ones that have the wicks on top, in the sense of the bearish, are opening candlestick. So I actually give this as an example before, but if candlesticks actually forms in the forex, when candlestick forms in the forex market, something like this usually happen. When another candlestick form, like after a closing candlestick, this is how candlestick form, the next candlestick form. So you see something like this. Let me give an example so to be very clear. So when candlestick form, there's in this week, all these weeks happen. When candlestick form is actually like this. So if the market is going down, you start seeing candlestick doing like this, candlestick doing that. That means what the market is going down, candlestick will be like this. Then price might now initially come in and then create a wick. Price is now what created, because price has gotten to this lowest point before. Then price might initially go up again. You start seeing candlestick go up again, candlestick go up, and it might actually come back and reverse down. Then you now see a week. So this is just basically to tell you how candlesticks move in the forex market. So candlesticks move like this. Price will get to a particular high point, come back down. Price will get to a particular low point, come back, come back up again. When price gets to a particular low point, come back before initially doing what is closing movement. So sometimes the closing movement might be that it's going to close up like this. If I close up like this, then if you want to give you a Maribosu, like the example I told you guys, to close like this with a full body close, then the next opening candlestick will now start from what? Will start from here. That's to show you that what price closed here. Then if it's that price closed here, something like this, you see that the next closing candlestick will initially be here. The opening candlestick will initially be here. So this is where the opening candlestick initially starts, right here. Same way, if it close down, if price comes down like this and close down right here, the next opening candlestick will start from where? From here. This down that it closed. Start from this down that it closed. So this is basically how candlesticks works in the forex market. Sorry, I was supposed to give this example earlier before even diving deep into candlestick pattern. So hopefully you guys now understand the opening and closing of candlesticks in the market. So yeah, continue with our candlestick pattern. So the second one, you have a spinning top and a spinning. Yeah, two of them are actually spinning tops. So they actually signify loss of momentum in the market. So when you see candlestick pattern like this, it actually shows you that price is losing a lot of momentum. Like sellers or buyers are actually getting out of the forex market. So you tend to see probably consolidation after seeing a spinning top. These are examples. Yeah, these are example of this kind of candlestick pattern. Something like this, because like this in the market. So once you see them, you see that consolidations are happening. You see that price never moving that fast. Consolidations will also be happening when you see candlestick pattern like this. As you can see, this is a clean example of the spinning top. These are the clean example of the spinning top. Candlestick patterns like this are basic example. So it shows you that there's not enough momentum in the market when this spinning top actually happen, or price got to a major level. Sometimes price got to a major level and wants to reverse towards the upside. As you can see, price was initially selling here and got to this key level right here. I think the key level is where, let me shift this. Okay, the key level is around the 1.24500. So his key level is around 1.245. So price initially got to this key level, and you can see started forming what spinning tops. Signifies loss of what momentum, and a change of character we probably want to happen. So as you can see, after price touched this level, price initially reversed towards the upside. So that is basically an example. So the next one we'll be looking at dojis. They're actually similar to spinning tops, but these ones have actually no body. Nobody in the sense that this candlestick this thing don't actually happen on dojis. So dojis don't have bodies in the market. All you'll be seeing is wick. All you'll be seeing, all these are basically dojis, examples of dojis, as you can see here. Nobody of this. So this is the long leg doji. Why this is the long leg doji of the bearish candlestick. So these are what cross doji, and this is what inverted cross doji. But these are basically example. I don't feel you need to know this. Just make sure you know this. So these are dojis. But candlesticks without body in the market are called dojis. I'll show you guys an example of that. Also signifies loss of momentum too, or price have gotten to a key level in the market. So dojis tend to form when price gets to what key levels in the market. Show you examples. I think, yeah, where I've seen this is probably GJ. Yeah, exactly. So you're looking for what? No wicks. Candlestick with no body at all. So I think this is an example of a doji though. But it's not a clean doji since it had a little wick. But yeah, they most likely have little wicks, but this is a clean example of a doji. But let me look for another one. Because I think, yeah, we have another example right there. I think I saw plenty of them. Okay, yeah, these are actually dojis. Yeah, you see, as you can see right there, see there are some of dojis here right there. This is an example of the long leg doji. This one that we actually saw here. Yeah, so this is a clean example of the inverted cross long leg doji. So these are the long leg doji that I initially showed you guys. So these are doji. So this is an example of a doji. This one too is kind of like a doji. This one too is kind of like a doji. Yeah. So another one I would like to show you guys is I told you guys not all of them are actually important because there are thousands of candlestick patterns out there. So you don't need to know everything. But the ones I'm actually showing you are the ones that initially are very compulsory for you to know. Now, so the next one I'm going to is bullish and bearish engulfing. So a bullish engulfing is when a red candlestick and then an opposite candlestick follows. When an initial candlestick open, an opposite candlestick follows with what? A more momentum, like a more better momentum than the previous candlestick. Just like we have here, as you can see, what a short bearish candlestick initially happened right here. That's a selling candlestick, right? Then, as you can see, the next candlestick that followed what brought a lot of momentum than the previous one, just as the same way as what the bearish engulfing candlestick. You see right here that what there was a short bearish and bullish candlestick, and then what the next one that followed is what a long bearish candlestick. Think okay, see an example right here. It shows that what there's a change in character when engulfings like this happen. I think this is a basic example of the bullish engulfing that I initially showed you guys. So you can see right here, bullish engulfing when the red one is actually short, and then the next candlestick that follows is bigger than the next one. This is a typical example of what the bullish engulfing candlestick. And this, I think, let me look for example of the bearish engulfing candlestick. bearish engulfing candlestick, there's actually small. Exactly. This is kind of like a bearish engulfing candlestick, but these ones are kind of closer because I'm looking for candlestick that is short, very short, and then before the next bearish candlestick we actually follow. But this is a typical example of what the bearish candlestick. But let me look for another one. Yeah, bullish and bearish engulfing candlestick actually happen a lot in the market. So this is an example of the bearish candlestick. This one right here. The typical example of the bearish candlestick if you look closely. So you see that there's a short bullish candlestick and there's a long bearish candlestick, which shows that there's probably going to be a lot of selling pressure in the market. So this is an example of that. So yeah, so the next one I'm going to is morning and evening star. This one right here, morning and evening star. So these ones too are very frequent in the market. So it's called the morning star and the evening star. So example of this is you have a long bearish candlestick, then you have a doji in the middle, and then what you follow will be an opposite candlestick. But this one there's a doji in the middle. There's always a doji in the middle. If you see a morning star or an evening star, a morning star signify a buying pressure. That means the bias is for price to go up when you see a morning star. Why the evening star is for our bias is that price is going to go down. So if you see a doji with bearish closing, and then a long wick will now follow, a long bearish wick will now follow, shows you that there's a morning star, while in an evening star there is going to be a bearish doji, and then a long bearish candlestick will now follow. So let me show you guys an example of a morning star is. So this is it. This is basically the morning star, like I told you guys. So morning star signify a lot of buying momentum in the market. So if you see as you can see right here, the bearish doji happened right here, and then a long clean this thing buying momentum actually followed after the morning star initially formed. So this is a typical example of the morning star. So let me look for an evening star for you guys. So this is supposed to be an evening star, but it's not giving what I actually want. But this is an example of an evening star. So let me sort of an evening star. Let me show you guys a clean example. Okay, seems I can find a bearish let me check something in 15 minutes. Seems I can find an evening star. Since market is showing towards the upside, I think your GG has been buying since these days. So this kind of stars don't actually form. See, because market is actually buying, but this is just an example of what I'm trying to say. A bullish candlestick, then two bearish candlesticks will actually follow. First one will be doji, and then the next one will be a better body candlestick closing. That just signifies morning and evening stars in the forex market. So this is a basic example of what I'm initially saying. Let me highlight that. Yeah, so this is a basic example of the evening star. So next thing, let's go to the next one I will be explaining will be the three white soldiers and the three black rows. I think that will be the last one. That will be our last ones. All this one right here, all these ones right here, I don't actually use them in the market. So after these three white crows and the three black crows, these ones are the basic one I actually use in the market. Those are the candlestick patterns I actually look forward to in the market. All these ones, this matching eye, closing eye, advanced block, I don't actually use that. I don't actually even know most of them, but three white crows, morning star, evening star, maribozus, long and short, bearish and bullish candlesticks, the dojis are actually very important too. So very quickly, the three white crows actually signifies candlestick patterns actually following themselves, like the same candlesticks following themselves. It's actually what you call three white crows. So if three bullish candlesticks are following themselves, they're actually called three white crows. Why? If three bearish candlesticks are following themselves, like the same time, it's not that you see a bearish candlestick, then you now see a bullish candlestick. No, they are following themselves like straightforward. Like you see them back to back, so they are following themselves back to back. So let me give you a basic example. It actually signifies a lot of what buying exactly. So this is an example of what three white crows, bearish candlestick following themselves back to back. So at least three. They have to be at least three. It shows that what price is what is going to form probably a very bearish momentum in the market. So initially, after seeing these three white crows, you see that your price initially was headed up. And then just the same way as what the three black crows. Let me give you guys a typical example of the three black crows too. Actually signifies a lot of selling pressure too when the three black crows actually happen. So back-to-back candlesticks like this are called the three black crows. Back-to-back bearish candlesticks are called the three black crows. So if you see them following themselves back-to-back, actually shows that there's a lot of selling pressure in the market and price is likely going to sell. So, like I told you guys, them closing the candlestick pattern topic. Like I told you guys, you don't want to trade candlestick patterns alone. You want to trade them with other confirmations in the forex market. Not that you see dojis. You now feel that price is going to sell. No, you have to actually trade them with probably with other confirmations in the market. Probably you see that price is in a major resistance level or price in a key level. That's when you start seeing dojis. Yes, that will tell you that what price is losing momentum. Price might actually reverse. But no, you want to actually trade it what other confirmations, not that you only be trading candlestick pattern alone. So basically that's the topic for today. I think we've treated most of today's topic. I think we've treated two topics today. So I'll be giving room for questions now. So if you have any questions, please let's quickly treat your question. So the first topic is scalping, intraday trading, and swing trading. If you have any question on that, please let me know. Why the second one is currency pairs for beginners, and the third one is candlestick patterns. So if you have any question, please let me know. Yo, what's good, guys? So the next session, guys, will be trading view, an introduction to trading view. So, like I told you guys, trading view will be the platform in which where we'll be trading in. So, like where you'll be doing your analysis, all of your technical analysis and the rest. So basically, there are tons of futures on the trading view platform, and I would like to go through them very quickly so you guys next, when you guys download it, you guys will not be new to it. So definitely, what else, what should I say? Okay, first let me start with the time frames, guys. So on the trading view platform, you have time frame right here. So as you can see on the top left corner here, there's the 1 minute, 1 5 15 30 minutes, 1 hour, 4 hour, daily, weekly, and the monthly. What the time frame this time frame will be favorable to your trading conditions, like your trading plans, because like I told you guys previously, there are three types of traders. So they are the day traders, the swing traders, and the scalpers, right? So I think basically swing traders are the ones that can actually go to the monthly time frame. Yeah, right here. See the monthly time frame, or weekly or daily, to actually do their technical analysis and analyze the markets right here. So I think this one are for swing traders. Why for day traders? Our analysis might start from probably daily, right from the daily to the 4 hour, 1 hour, and then the 30 minutes. Why for we scalpers too? We scalpers too can actually start our analysis right from the daily down to the 1 minute. So you can start analysis from the daily to the 1 minute. So it's just that cool, guys. So this is the time frame right here. And what else? The second thing will be these drawings right here, these tools. So these are called the tools on TradingView platforms. So this is like the trend line, arrow, ray, extended line. So these are just line tools you can actually draw to identify where price or market is. So the ones on stars, are marked as my favorite. As you can see, they are right here. These are the ones on stars right here. Okay, this one is the brush tool, the text to the note, so you can actually click it and just put notes there, psychological point or something like that. Let me do one here. You can actually put sorry, exactly. You can just put main zone. You can just put main zone, enter. Okay. So that you can just put main zone right here. Anything, basically anything you want to type here. And this one is the pattern. So this is the long and short position. Yeah, you can just basically go through them. You can just basically what is this? Sorry. So you can just basically go through them when you check the trading view platform out. And right here, right at the top right, the top right corner, top right corner, yeah, right there we have our price, like the currencies I trade with, like the pair I trade with. So this is gold, AD, AU, sorry, XAU USD. That's gold spot, as you can see right there, gold spot. And there's GBP AUD, GBP JPY. This is the BTC. You can just basically, so how you add your pairs, you can just, if you click right here, this plus sign right here, and just choose any pair you want to add. Let's say you want to add Euro USD. You see tons of this thing. Just click on it and then they will appear here. So it's called the watch list, where you can actually see the currency pairs you trading. So I don't trade all of these, but mostly I trade, like I told you guys, I trade gold and gem. Those are like my main pairs. So this is the watch list right here, and this is the timer. Yeah, this is the timer alert for you to actually set alert on your phone. So let's take for instance, like you are not glued to the market, like you want to do something else, and you're just like, I don't want to actually miss something when price gets to one level. Let's say this level right here. So you're like anticipating that once price gets to this level, like a major move should happen. Like I want to buy when once price gets to this level. So you can just easily create an alert that will be sent to your phone, to your mobile phone, once price just get to this level on the trading view platform. So this is like very nice. So once price just get to that level, you just receive a beep and just tell you like, alpha price has gotten to that place you want to buy or sell. So you just quickly go to the first market and see what is happening there. So I think that's just it about the alert. Then this one, data window on the like, so you can just check them out, guys. They are very, very, very easy to understand. And then lastly, what else? What else should I point out? Okay. The last one I like to point out is the play and replay option. The thing about the play and replay option is that if you are not subscribed to the premium version, you can actually use this play and replay option on lower time frame. You will see that once you do that. So what the play and replay option does do is that you can actually backtest with this. Exactly. So you just see my price just cleared everything that has happened here. So if I just click this play now, um, price will initially show me everything, like how market move during that session. So that's what the play and replay option is just used for. As you can see, guys. I'm sorry, I think my network the network here isn't connecting. It will show now. So yeah, let me clear it again. Okay, let me play. Yeah, as you can see, guys, so team is playing. So it's just as simple as that, guys. Just as simple as that. Play and replay option. So if you want to subscribe, like see here, I'm subscribed to the premium version. I think it's just about $15 or so. Okay, yeah. So as you can see here, I'm subscribed to the premium version. It lasts for 30 days. So it's just for $15. That's about 13K or 12K. So yeah, it's very cheap. So that's just it about the trading view platform, right? And then lastly, okay, one major thing I want to show you guys too is market direction. Yeah, so I like to point that out to how markets move. So market basically move three ways, guys. So the down market is moving down, which is a downtrend. So market is moving down, like it's downtrend. The market is down, it's going down. So you know that this is a downtrend. You're only looking for sales. You're looking for sell positions. Or markets move up. So that is an uptrend. So you're only looking for buy position. Market is just going up. Why markets move sideways? So this is basically consolidation. The market is neither going up or going down. You just see that market is going sideways. market is not doing anything. So try as much as possible to avoid consolidations. So you're looking for buy or sell trends. So where you can enter for sales or buys. So let me quickly show you that. So this right here is a consolidation. As you can see, you just see that price is just weakening, right? Price is just doing up, price is just weakening around this area right here. But this right here is a sell trend. So as you can see, market pulled down massively. It's even right from here itself is a sell trend because market pulled down here, consolidation pulled down here. So that is a sell trend, guys. Why? Yeah, right here. As you can see right here, this is a buy trend. This right here is a buy trend. So market pulled up, as you can see, market went to the upside. So if you just take your, if you took a buy right here, of course you end up in profit because you took a buy, right? So that's a buy trend. So this is just basically the three type of trend direction: buy, sell, or consolidation. Try as much as possible to avoid consolidation, like I told you guys. And I think that's just basically pretty much everything about this session. Like if there's any other thing, definitely I'll point that out too. So I'll see you guys in the next session. Yeah. So guys, our next topic is the next session is support and resistance. Yeah, in bracket, I think psychological levels, they are very important and they come hand in hand. So basically, in the forex market, you tend to see like tops, like you tend to see tops. Like what I mean by tops and bottoms are like you see something like this. Yeah, a bottom. Like that is definitely a bottom, right? So and you see something like this sometimes too. Like something like this. Yeah. So this is basically telling us is that like there is a particular point that price got to before it actually reversed. Because as you can see right here, price was going up. As you can see, a little pump to the upside. And you just see, there's a mad reverse, boom, the market just drops down. And right there too, market was going down to right here. Then you just see a reverse. Then you just see that market just went up. So this reverse, so you actually need to ask yourself, what are the stuff causing all this reverse in the forex market? So here is what you call the support and resistance. So to actually find your support and resistance, first thing you need to do is to mark up your psychological levels. So if you don't know what psychological levels are, just look at these numbers right here. You see these numbers right here. Random numbers, like round numbers, are what you call psychological levels. So round numbers like 1.240000 are like the psychological level. So what you just need to do is just tap on this horizontal line. I think I showed you guys, right, when I was explaining the trading view stuff. So what you just need to do is just tap on this horizontal line right here and just place it there. Once you see round number, so just click it, and then you can just click settings and just make sure the figures are actually round. Where the coordinates? Yeah, coordinates. So just put 0, 0, 0, 0, enter. Exactly, as you can see, guys. So this cycle, as you can see, one psychological level marked out, right? So you can just go again and check another one. So there's another one right here, 1.25000. Okay. Click on your horizontal line again and put it right there. Boom. All the settings, put the coordinates and 1.25000, right? Okay, enter. For you to actually see it clearly, now just pretty much take a rectangle tool and highlight it. So I would like to also point one thing out, guys. So most times price don't usually get to this psychological level for a major move, but you just know that, like, just make sure that you keep the psychological level in your head. Like price don't need to actually get it. And sometimes you can see price will just weak past it, just a little weak past it, and then you just come inside back. Definitely, psychological level cannot be respected like respected. Price can just not get here. Price cannot just get here and just stop. Sometimes price might just bring a long wick like this one right here. Price will just bring a long wick, then just continue towards the upside. Or price will just come close or just dance around before you know price will just head down. So that is what you just need to put here about psychological levels, right? So these psychological levels will actually mark out our support and resistance zone. So remember, Resistance is for what? Is for where price has gotten to at the topmost, like at the top. So resistance, when market got to and resisted that place, like price is not breaking past it. Why support? Support is the downside. So this is called support. What is actually pushing the market towards the upside. So price like was going down, then before it just hit it. So this is called support. Let me actually put the text. Okay, text. Okay. Okay, so support for bottom. Okay, okay. Support for bottom and okay. Resistance for top. Okay, yeah. So hope you guys can see it, right? Yeah. So as you can see, guys, price came here, give it a support and push the market towards the upside. Where price came towards this 1.250 zone and just retested it, right? You see that there's a long week there. So price came back, retested. Before the initial drop, even price came again, weak it again, as you can see before here. So this one too right here, this support zone, as you can see, price came here, didn't break past it, pushed towards the upside. Price came here again, touched it. So you can actually mark out your I think yeah, this is a strong psychological level too. Yeah, if you should check. Yeah, as you can see, I think this is around 1.2 to 2800. So you can actually mark that out too. So I don't actually mark all this. You don't actually see plenty of this line in my, because I don't like keeping my chart dirty. Like I don't want my chart dirty. I want to see price action. I want to see how the market moves. So if you look previously back, okay. I think I even marked some points. Okay, you see, that guys, you see, I used to mark some points in the market. So, but as you can see, guys, these psychological levels are respected most of the time. As you can see, price came here, respected price came here too. You can see weak. That's just basically it. Like Forex is not hard. Like as you can see right here, too, you see, I told you sometimes to not get psychological level before a big reverse. Before, as you can see right there, so price didn't even get to that point, but it just see major reverse. So that's why this box come in handy sometimes. Just make sure you just draw it around the area and just that, yeah, as you can see, price just touched it. So just make sure you do that. These are the previous analysis. Yeah. So that's it. I think that is just basically about support, resistance, and what psychological levels. Yeah. So hope you guys understand, guys. So like I told you, if you don't understand it, come back to this video. You watch it until you understand. So it's as simple as that, guys. Let's go to the next lesson, guys. What is good, guys? So the next lesson, which is Fibonacci. Yeah, Fibonacci retracement. Fibonacci retracement is yeah, can be really helpful at times. So it's a tool, guys. So you can actually check it out right here. If you don't see the Fibonacci, just check these two sides. So like I told you guys before, two sides are right there. I've actually saved it to my favorite right here, Fibonacci Fib retracement. So but this is it, guys. So just click on that and draw it, guys. Boom. So I'm very sure this is weird to you guys. So you guys don't understand any of these numbers. Like, what is this? Like, I don't mean to be like, what is this? This guy has brought another thing, right? So this is called. Let me actually put it down so you guys can see the numbers very clearly. Okay. So this is called the Fibonacci retracement tool, right? The tool actually help us to mark out price, like where price we get to before you initially see any retracement. So I'll actually use that in the chat, but let me actually explain these numbers. So basically, what you are watching out for is for price to get to these levels. You get to these levels. You actually draw your Fibonacci using the top and the bottom of price movement. So where price has gotten to at the highest point price has gotten to and the lowest point price has gotten to before price is now dancing around this position. Like I said, I'll show you guys in the chat. But what you're basically watching out for, like first things first that you need to keep in your head is that we are watching out for price to actually get to this point. This 61%. Yeah, you can see right here, guys. 61%, the 50%, which is at the middle, and the 38.20 extension. So these are called extensions. That's why it's called Fibonacci. Fibonacci in general, and then the extensions. So you're either, so this is our bias for price to get to these points, this 61.80 point, 50 point, and the 38.20 point. So we're actually watching for price to get to that place before we see any major reversals. So also keep in mind that price can also get to this 78.60 sometimes and this 23.60 sometimes too. So keep that in mind too. So these other numbers are actually what you see here. So if they are confusing to you, they're actually the same thing. So don't be confused with these numbers. These numbers are what is here. Keep that in mind too. So don't be confused, guys. Okay, so let me implement this. Let me implement this to the chart. Yeah. Okay, and yeah, so for a downtrend, guys, so market is pulling towards the downside, right? Let's say like we end here during the time, right? So let me pull up this replay option. Yeah, so let's say we're like this. So market was dancing, and we're like, oh, it seems what is price going to do next like this? So let's say you just pull up our Fibonacci to then draw it like I think it's a downtrend. So draw your Fib from right from the bottom to the top. Because what? Because it's a downtrend. If it's an uptrend, you draw your fib right from the top to the bottom. If it's an uptrend, but a downtrend, draw your fib right from the bottom to the top. So guys, keep that in mind. So it's actually as simple as that. So here we go, guys. Yeah, picture is perfect. Exactly. So like I told you guys, our buyers are what? Buyers are what? 61.80, 50 extension and the 38.20 extension. So you're like now coming down, you're like, let's see what price though. Look at, is price going to retrace, or price is going to bounce off the retracement extensions. So let's say we took our entry right here, like price have crossed the 50 zone, and we are like, yeah, this is giving us the major confirmation. And I'd like to point one thing out. Make sure you don't ever trade the Fibonacci naked. What I mean by naked is that, you have to have at least two confirmation before you take any trade in the Forex market. I'm just using this Fib retracement because this is the lesson. So I'm just using it as an example. So make sure not to use the Fibonacci alone as a confirmation. But let me just show you guys an example. So let's say I was going for a short position, like price has touched this 50 zone. Price is likely there. I'm going to this 31. So let's just see what price do. So let's see what price do. Like Madu, this retracement has done this one. This will be a possible retracement. So what you just need to do is just carry your short position, and let's say you enter a trade right here. Probably just right here, this 38.2 extension. I told you guys to price can touch this place and put your stop loss probably right here at this 0% Fibo extension. And then our TP, our TP will probably be exactly. So this extension also pointing one thing out too. This extension actually show you where to put your take profit target sometimes. So I can actually put my take profit target right here at this psychological level, or I'll put it at this Fib extension, this 1.618 extension. So either one is prepared. Anyone that's preferable to you. But let's not be too greedy now. Let's put our take profit in this psychological level. And let's see what price does. So you can see, price just literally went down after the retracement. So that's why this is called the Fibonacci retracement. So as you can see, I think, boom, guys. So as you can see, price just literally went down after the retracement. So that is just how you use the Fibonacci retracement tool. It's as simple as that, guys. Don't let anybody be complicating things for you. So this is basically how you use the Fibonacci retracement tool. So coming to the settings of my Fibonacci settings, just click settings. So most times in the default, you might not actually see the colors of this Fibonacci. I was the one that actually set everything like this to my preference. So what you need to do, probably take a screenshot right here of this stuff. I don't know. Or you can just come back and just set it to your preference when you enter the trading view platform, like I told you guys. So you can just take a screenshot or just save it or something like that. So this is my settings if you need my settings of the Fib extension. And so this is just basically everything you need to know about the Fibonacci retracement tool, guys. So guys, yeah, off to the next lesson. Yo, what's good, guys? Hope you guys are doing well in this series. Don't worry, guys, it's about to come to an end. I think, yeah, we are closing up on everything you need to know as a beginner forex trader. So the next topic is moving average. Yeah. So moving average crossover. Yeah. So basically, I think you guys must have seen this line. uh You guys must have been asking yourself, be like, what is this line that this brother put here? And it's not saying anything about the line. Does he know how to show us the strategy? Don't worry, guys. I'll be showing you guys everything. So this line, guys, is called the moving average. So you can basically add this line by just going to indicator. So you see this stuff right here. It's called an indicator. Just click on it and type moving. What you're actually saying is here is that I'll put it as my favorite. But just if you don't see it there, because like now you're new, so you might not see there. Just type moving average. Moving average, yeah. Okay, so you just see there and just click on it. Just basically click on it. And once you click on it, you just see a line right here. So after, yeah, you need to tap on two moving average, because I'm using two moving average. So some people use one moving average, some people use two, some people use three, some people even use four. So go to the line as four, but two is enough for me. Two is my strategy. So just click it twice. You can go click it once, then go again, click it twice. Then you need to set the first one. You see the settings here. Yeah, there's a setting right here. You set it to input. You go to the input. Set this length. You set this length as 8. Once you click, just click OK and save it. Then see the second moving average, length to 15. Right, this guy's 15. So the default is actually 9. When you actually type that, so the stuff is 9, but because I've saved my own, that's why it's actually showing this number. So go to 15, click OK. Then for it to actually be colorful, for you to know what is actually happening in the market, make sure you set your 8 moving average color. You see it in the style. Make sure you set it to green, which is bullish, right? Green is representing bullish for now. And then set the 15 to red, which is bearish. The red is representing bearish, which means the market is going down. So after doing that, like that's pretty much everything you need to do. So after doing that, then you notice that when there's a major crossover, there's like price movement. There's price movement, right? When there's major crossover. So just like here, as you can see right here, when the 15 MA, which is the bullish area, cross the red, when anytime you see the red moving average on top, means what? The market is going down. So as you can see, right, the red moving average climbed the green moving average, and you just see like there's a major pull towards the downside, right? And anytime you see the green, like the red below the green, it means what? Market is moving towards the downside. So as you can see right here, like the green crossed over the red, which means market is moving towards the upside. So bullish. So what it does, like I told you guys, this is pretty much simple. The 8 moving average represents bullish, while the red moving average represents bearish. Anytime either of them is on top. So this one crossed it, and the red and the green was on top, which made the price go up, right? It's just as simple as that, guys. So as you can see here too, there's a moving average crossover. The green moving average crossed over the red moving average, which like gave us a bullish momentum in the market, right? Yeah, another example right here. As you can see, the red crossed over the green moving average, which pulled the market towards the downside. So it's just as simple as that, guys. This is typically one confirmation anytime you're entering the market. So let's say, for instance, you just see this crossover, you say, a crossover has happened though, and like anytime crossover happens, like there's a major pull in the market, I just be like, this green moving average have crossed over the red moving average. Let me take my long position. Like you can just typically enter here, put your stops right here, and then boom, before you know, your TP is smashed. So basically, that's just everything about the moving average, guys. So you guys are asking like this line, this line. So the line is called moving average, and once a crossover happens, yeah, there's like a major thing that's happening in the forex market. So make sure you actually know that and take note of that too. So that's typically my settings on my moving average. Yeah. So I'm typically showing everything, most things I use in the forex market to you guys. And this is all for free. Like wow, guys. So yeah, that's pretty much everything about moving average crossover, guys. Also point one thing out to don't use the moving average alone. Like I'm laying emphasis on not using this stuff alone. So like at the end of the day, we won't end up with a losing trade. That's what make sure you actually use this with your confirmations. Confirmations like probably you cannot use a fib as a second confirmation or price in a major psychological level. I just feel that price tapped in here in the major psychological level, and then you now see a crossover. That's like two confirmation. You know that price got to this psychological level. There should be a pull towards them. Then you now see another crossover. Let me zoom in. Then you now see a crossover like this. And just like price should be going down. Price should be going. Then just take the sale. So it's just as simple as that, guys. And I'll see you guys in the next lesson. Yo, what's good, guys? Welcome to the next lesson. The next lesson, which is trend lines and channels. So, in this lesson, guys, I'll be showing you guys how to draw your trend lines and channels in the forex market. So it's a very vital thing in the forex market. I think you guys need to actually understand. So anytime you see something like this, you see that you feel like the price is going towards the downside, and like price usually creates tops and bottoms when it's going towards the downside, like when I told you, right? Even when it's going towards the upside, so they're actually tops and bottom because price don't go like this. I know I showed you guys before like this, but price don't go like this when it's going towards the upside. Price usually does something like this. The top, bottom, top, bottom, top, bottom, like something like this when it's going towards the upside, and when it's going towards the downside, same thing happen. Bottom, top, bottom, top, bottom, top, and then continue towards the downside. So that is basically how price moves. So price don't put in mind that price don't ever go straight to price ever go straight like this. Price usually form both tops and bottoms. Even when price goes straight like this, just mean there's like a big buy momentum, like something like, for example, something like this is a big buy momentum. But as you can see, this one right here, price came up, came down, came up. But at the end of the day, it's just a one channel. It's just a one channel. So this is called the trend line. If you want to draw your trend, so just like I think the trend was something like this. So you can actually collect these three lines. You can actually use the body or the wicks to connect this trend. So let me use the body for this one as an example. Sorry, let me connect these three. Yeah. So what you initially have to do is to look for three or more lines and actually connect them exactly. So boom, guys, this is what you need to do if you're actually connecting your trend. So this is how to connect your trend, guys. And then a channel. So this one is called a channel. Why if there's two consecutive trend line, it's called a channel. This one is called a trend, sorry. Why if there's two consecutive trend lines, it's called a channel. So this is what we call channel, guys. Let me delete this stuff. Chart is kind of messy, right? Okay. So this is what you call a channel, guys. But if it's only one, like I told you guys, it's called a trend. So each time you see that each time price touches this place, like there's like pull towards the upside. Price touches this place, like a pull to right. So there's like a pull towards the upside. Same with this one too. Same with this one above here. So each time price touches this trend above, you see that there's like a pull towards the downside, touches so that's just basically how to draw your trend line and channel in the forex market. So like I told you, keep in mind, one is a trend, while two is a channel. So anytime price touch here, So anytime price touch here, you just feel that let's say price you're in the market, then price just touch here or here or here. I just like price has touched this place, and I've drawn my channel. I'll just like basically sorry. Let me do this is the long. So I just basically short my position. Just let's say take my entry right here. Put my stop loss. Put your stop loss what above the channel. Then put your what your TP right here where you drew the other channel, where you drew the other trend, right? So basically you just see that price just come and just eat your TP just like that, guy. So it's just as simple as that. Make sure you actually recognize your trends and your channel in the forex market. So this is an example. Let me see if I can find another one. Okay, I think there's another one right there, but there's not three or more stuff yet. The three, like I told you, when you see 3 or more weeks, it actually means the trend is strong. But this one, there's no 3 or more weeks right here, so I cannot actually connect them. Or this one, there's something like this right here. There's something like this. Well, no. No. Yeah, also I like to point out once you draw your trend and you see like a breakout. Yeah. Let me see. Like, I think this is kind of like a trend. So once you draw your trend and you see that there's like a major breakout out there, it just basically means price is going towards the opposite direction really fast. So most times when you draw your trend and you just see a breakout, a long week, like just this stuff has broken my trend though. Like price is going to revert sooner or later. So just make sure you're actually careful to once you're drawing your trend and channel too. Right. Okay, so upon that, I'm trying to look for another example so I can actually show you guys. Okay. I think there's a connection right here. Right? This is typically a trend too. I told you I'm scalper. So connect 3 or more. 1, 2, 3. Right. 1, 2, 3. Yeah. Although, although these ones are not very much respectable. As you can see, price touched this trend up, touched this trend, came back up, touched this trend, came back up. So that's just basically thing about trend lines. Yeah, just make sure once you find any trend market, identify them, draw your trend line and your channel. That's just what makes you a professional trader. And at the end of the day, you just feel that like your trading skills are improving and just you are becoming profitable. Any trade you trade, you just see that this thing just eat your TP. You are making money off the forex market. So basically, I think this is pretty much everything you need to know about trend lines and channels. So I told you guys, one is a trend, two trend is a channel, which means what price is going towards the upside. Also, if price is moving towards the downside, sorry. So if price is moving towards the upside, like I told you guys, this one to just draw a channel. If that this one I saw like 20 weeks, I don't know, it's not very much validated. Sorry. It's not very much validated. That's why I did like points like 6 weeks or so price has been acting pretty much messy because of the holidays, Easter holidays and the rest. So it's not very much validated. So I didn't see any week right there. This one is not a validated channel, but the validated trend, kind of a validated trend. I don't know. I'm trying to look for if I see examples. I think this is a pretty much good example also. That is a pretty much good example, of the channel too. So this is pretty much 1, 2, 3 right here. 1, 2, 3. I think something formed right here too. Although it's not complete 3. I'm just trying to force in to show you guys an example. So this is pretty much something like that. This is, you see that price touch here, touch here, touch here. So if you are here, you can easily foretell what market you do next, right? You can easily foretell what market you do next because you're like, once price touch here or here, you take either buy or what or sells. So just watch what happens. You see, price touch here. See, it's like price touch here. You see, so this is just basically what you need to actually watch out for in the forex market, right? So that's it about that on trend lines and channel, guys. So I'll see you guys in the next lesson. And I think I'll pop up some kind of like interface on my mobile phone on the screen for you guys to actually see the MetaTrader app. So I'll show you guys everything you need to know about the MetaTrader app. I think it will show now.
Yeah, so real quick guys, I would like to show you guys the MetaTrader app like I told you guys. So if you don't have the MetaTrader app, you guys you go to Play Store and search MetaTrader MetaTrader 4 or 5. So you can see them. You can just type MT4 or 5 and it will bring them there. So I use the MT4. You guys really click on it. I think this one is updated. Yeah, I think I have it here. Yeah, so open the app. Here's the interface. So you can add any account of your choice by just clicking the manage account and then click this three button right here or something like that. Yeah. So I basically use the MT5 to take some of my trades, but I'm just using this one as an illustration. So here is currency pairs. Here are the currency pairs. Like I told you guys initially, here are some currency pairs that you can trade. This is the AD, USD, Euro USD, GBP JPY, gold. So if you don't see any of your currency pair you want to trade, you can easily click this plus sign right here. This one here. So you just click it. See for forex crosses. Let's click on that and see all kind of pairs like your GBP JPY, NZD and the likes. So if you want to add cryptos, you also add cryptocurrency, I think Dogecoin, Ethereum, BTC and the likes. Which one is this one? Forex crosses. I think yeah, this one are other currency pairs too. Yeah. This is gold and silver, energies, indexes. This is Nasdaq. Okay, yeah. DAX, SP 500, ES30, Nasdaq, and the likes. So just check them out. Yeah, just check them out. So if you want to add any, just tap on it. Just tap on it and to show you as you can see it has added. So if you want to check the charts of your this thing, you can just long press and then open chart. Let's say you are going for gold, open chart. Yeah, so this is an open chart on gold. So yeah, you can change any time frame, just like the MetaTrader. Is the 1 minute, is the 15 minutes, 30 minutes, and the likes. So yeah, all of those good stuff. I think here you can add your rectangle to trend line and the likes. Like it's very good like that. This stuff is actually added. Here is an indicator. So this is the RSI. This is my settings for the RSI. I think I'll go deeper on that in the intermediate too. I just basically want to show you how the MetaTrader. So if you want to place a buy and sell trade, this is a 10k demo account like you saw there. You want to say you place a buy and trade, let's say yeah, this is a major resistance right here, B. So yeah, suspecting that price will go down right from here. So just click on this something here, this stuff here, then choose your lot size. Choose any lot size you want to choose. Say you're using one standard lot, 100, then place your sell. Boom. So your trader has been placed, as you can see right here. Trader has been placed. So you can adjust your modify. Just click modify. You can put your stop loss. You can put your stop loss and take profit anywhere you want to put it. So that's just basically. And once your trade is in profit and you want to close, just click close order. It's as simple as that, guys. It's as simple as that. So all the rest of this stuff you want to see. What other stuff? Okay. Sorry. You can easily customize your charts. Yeah, you can put chart color. See, like I trade the black market. Some of you don't know. I'll also be explaining that in the intermediate. So sorry guys, you can't cover everything just in the beginner's course. That's just the thing. So you can change your chart colors by just going to settings and I think colors right here. See, I basically choose any color that you want. And yeah, I think all the rest of the interface are pretty much simple to understand. So I think yeah, that's it about MT4 guys. So just go to Play Store and download it, install the app, and check the interface. It's really easy to understand. So yeah, I'll see you guys in the next one. Peace.